Hey guys, welcome back to my channel once again. Skipping the basic introduction once again just because of a bad hair day and didn't want to come in front of the camera. So today we'll be talking about one really good penny stock which has a really good upside potential in the long term and also in the midterm and short term, but we'll be discussing this in detail further in this video. And this could be a really good penny stock, in fact, for 2021 as well. Seeing its growth right now, yes, I think so. So anyways, without further ado, let's just hop into it. But one second, guys, I have a small request to make, that please smash and hit that like button until you destroy that button, and keep spreading that love. And of course, guys, don't let that subscribe button feel left out. Okay, please don't let the subscribe button feel lonely. So please help the subscribe button to feel great and hit that subscribe button as well. And now, yeah, we can move forward. So today we are going to talk about TRXC, trading with the ticker symbol TRXC. Currently is at $1.16 at the time of making this video, already up by 28.9% from the previous closing price of 89 cents or approximately 90 cents, with a market cap of $115 million. And guys, before we jump onto the company's introduction, I would just like to clarify this as a disclaimer that me and few of my very early patrons, we bought this company at 46 cents in euros, that is approximately 56 cents in US dollars, and now the stock is trading at 2 euros and 16 cents. That means we are up by 366% already, and I guess this is a good enough reason to join our patrons. Okay, now let's move on. Okay, so the company TRXC actually deals with digital laparoscopy, but before that, let's have a look at definition of laparoscopy. So laparoscopy is an operation performed in the abdomen or pelvis using small incisions with the aid of a camera. The laparoscope aids diagnosis or therapeutic interventions with few small cuts in the abdomen. So TRXC has actually enhanced the traditional laparoscopy by digitizing the interface between the surgeon and the patient, and they have done this through their equipment called Senhance. And since the surgery is actually performed via an interface between human and a robot, it of course includes increase in the efficiency, precision and control. Now this system has the first of its kind, has eye tracking camera control, then haptic sensing, and with improved ergonomics, which is very important for the surgeons to handle the surgery. And this environment is actually compatible with the existing OR systems, and the reusable instruments, which is actually used for the equipment and the surgery, actually generates a good return on investment for the hospitals. So this, guys, according to me, is an evolution over the traditional laparoscopy with improved efficiency, control and precision. So these are some of the limitations of a traditional laparoscopy. So for example, in case of operating room inefficiencies, which includes surgeons' inability to control vision, which can cause efficiency and safety challenges, quick movement or unsteady control of the camera can cause fogging, which requires a pause in the procedure of cleaning, adjusting the way instruments are positioned for the purpose of ergonomic improvement is inefficient. And then limited clinic intelligence includes haptic feedback, which is quite limited, which is actually important and which causes lack of sensing of force generated at the places like the abdominal wall. The surgeon is not in direct control of his or her visualization, and working outside of the visual field is a common challenge due to a lack of camera control. And all these shortcomings are actually countered by the TRXC digital laparoscopy. And actually the statistics also says that robotic system supports surgeons and increases patient safety. So now let's jump on to some of the company's highlights. So Senhance Surgical Robotic System, which is from TRXC, is the first and only digital laparoscopy platform. Now significant and differentiated addressable market opportunity, FDA cleared, which is one of the most important things for any medical instrument, CE marked, and Japan PMDA approved. That means business expansion in Japan as well. Now building awareness and ramping up clinical adoption, well positioned to bring augmented intelligence and machine vision to surgery. Now what is more exciting for us investors is the business expansion in different countries for a particular business, right? So this map right here shows that they're headquartered in different countries, which also means the possibility of expansion in business opportunities like Japan we already saw, and Europe as well. So active sites in the US, EU and Asia, 3,700 plus surgeries has already been performed till date, 140 global employees and 100 plus surgeon users. So laparoscopy is the most widely performed surgical technique and carries limitations that compound these factors and can impact clinical outcomes, and the digital laparoscopy seeks to address these limitations like we already saw. And the other really important factor for us investors is to see the addressable future market for a particular company and for a particular technology. And in this case, the abdominal robotic surgery market is expected to reach up to approximately $16 billion until 2023, which is quite phenomenal. Okay guys, so now to make things a bit interesting, let's calculate a few numbers based on this particular number right here. Okay, now guys, just to make this clear that these are just speculative calculations, these are just my assumptions based on the future projections, okay? So the total addressable market for the robotic laparoscopy abdominal surgery is supposed to reach up to $16 billion approximately by 2023. Now let's say if TRXC can acquire just 10% of this total market share, then the targeted revenue could reach up to $1.6 billion. Okay, so 10% of $16 billion. And let's say now if we consider the operating margin for the company to be at 10%, which is actually quite low because a decent operating margin should be somewhere around 15% to 20%. But here I'm being a bit conservative because the operating margin for TRXC is not that good as the operating earnings are in negative. So that gives us an operating margin in negative, which is really, really bad. And guys, if you're a regular follower of my channel, then you should definitely know that how much importance I give to these margins, as these are some of the basic fundamentals which are really important for a company to reach that stage of profitability. So this is a big red flag for me. But anyways, so they really have to work on their margins, and let's say they manage to work upon their margins until 3 years and they reach up to 10%, then this gives us an earnings of $160 million. Okay, now the future predicted earnings, what we just calculated, approximately of $160 million, and if we multiply this with a decent price to earnings ratio of 20, we get a future predictable market cap of $3.2 billion. Guys, this is a huge upside potential, but again, these are just speculations. So this might happen, but there is also a big chance that this might not happen, because if they are not able to make their margins better, then the earnings will remain in negative, they will be in loss, and the result will be that the stock price will have a downtrend. So now the market is quite optimistic about this company, to be honest, and that's why I am not adding any more shares at this particular moment, because I personally think that this is just the hype right now. So anyways, this is just my personal opinion. And guys, again, to clarify this, that $3.2 billion is a huge opportunity considering the current market cap of just $116 million. But again, please be careful, these are just speculative numbers based on my assumptions considering the future projected market possibilities. Now guys, their quarterly revenue was actually quite good compared to the other quarters in this year, but their yearly revenue has been decreasing over the past couple of years, which is actually a red flag for me at this particular time if I would want to buy the company at this particular moment, considering the stock price which is at right now. And in quarter 3, they also reported a negative return on capital employed. So what return on capital employed actually means? It simply means that how efficiently the company is investing the money back into its business to generate some extra profit. And here we see that the percentage is in negative. That means another red flag for me as an investor. But since the company is in a startup phase to deploy its new instruments, which is Enhance, and they are trying to capture the market, so I assume that bringing ROCE or ROIC to a positive number won't be an issue for the company. So for now, I can sway this red flag off. Okay, so moving on. Now, these are some of the significant 2020 operational highlights from Transcentrix. So 9 Enhanced lease agreements have already been signed, 8 clinical programs initiated and completed, 1200 plus case studies have been done, received FDA clearance and completed first surgical procedures using augmented intelligence and machine vision system, received CE mark and completed first surgical procedure for pediatric use of Senhance with 3mm instruments in Europe, made FDA 510(k) submission for general surgery indication expansion, and established Asia-specific training center at Saitama Medical University International Medical Center in Japan. And these are some of the milestones which they have achieved until now. So they received a CE mark for ICU in Europe in Q4 2020, received FDA 510(k) for general surgery indication expansion in Q1 2021 this year, filed FDA F10(k) for next generation ICU in Q1 2021 as well, filed FDA F10(k) for articulating instruments in Q1 2021. But that's not it, guys. These are some of the recent highlights which are quite important from an investor point of view. So Senhance surgical system received its registration certificate by the Russian Medical Device Regulatory Agency, allowing for its sale and utilizations throughout the Russian Federation. And this is actually a really big bullish point. Southern Surgical Hospital, a hospital based in Louisiana, entered into an agreement to lease and utilize a Senhance surgical system. Another source of revenue. First pediatric cases utilizing Senhance completed in October, representing the first time that 3mm instruments were used in robotic pediatric surgery, which we already saw, which was done in Europe. First surgical procedures successfully completed using the Intelligent Surgical Unit ISU, which we also saw before, leveraging augmented intelligence and machine vision capabilities on this enhanced surgical system. And adding to that, the year-end highlights were something like this. So in 2020, 10 enhanced systems were already installed but under operating leases. 9 clinical programs were initiated and over 1450 procedures were already performed globally. At December 31st, 2020, the company had approximately $17.5 million in cash and cash equivalents and restricted cash. Now, this is a really good thing, but the company currently expects to have cash to support operations into the third quarter of 2021. So when we talk about medical equipments, like in this case, in case of Senhance systems, I am assuming that the production cost is quite heavy. And if they would get more orders, I'm not saying that $17.5 million in cash is not enough, but I am assuming that they would be probably needing more cash. And how will they achieve this? Well, share dilution. And that's why, guys, I personally think that entering into this company at this particular point, which is, and it might open at more than $2, I don't think it's a really good idea. The risk to reward ratio is quite bad in this case. And that's why I would say that let's see, we should not jump into the hype. The company is quite good, but we should wait for the dip. Anyways, so fourth quarter revenue is expected to be approximately $1.1 million, and full year 2020 revenue is expected to be approximately between $3 million to $3.2 million. So guys, considering all these factors, I do see that Transcentrix has a good upside potential, but again, they would have to improve some of their internal processes. Now, I do understand, on the other hand, that this is a medical business and the upfront cost, such as equipment development cost or R&D especially, are quite expensive. But again, there are many other medical businesses which are quite profitable, so they would have to improve many things, like for example their margins, to make their financial status a bit better and to make the company a bit more attractive for the investors. But other than that, the company's outlook is amazing, because overall the company's technology is one of the technologies which will be used extensively in the future. And now the question about the buying price, well, the entry point at which me and my patrons bought this company at around 50 cents US dollars, we are at a relatively safer position, and we are definitely not going to sell this company anytime soon, because like I said, the company's future looks quite amazing. But buying into this company at more than $2 at this particular moment, I would say it's a bit risky, and I would personally not enter at this price if I would not have purchased this company before, and I would wait for a dip or a dilution like I just mentioned. So this would have been my strategy if I was not invested in this particular company. But guys, like I said, the company's future looks amazing. I would say let's wait for another dip. Now the hype is building up, so the price will skyrocket for sure, but I am pretty sure that the price will drop in the coming weeks or coming months as well. But in long term, this company looks really promising. And with this, I rest my case. So I will see you in the next one, guys. Stay safe, stay healthy, and ciao.